We are now 5 hours away from the merge. The day is finally here. We've been talking about it for months. All I've heard over Twitter is merge, 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 merge. Everyone's always talking about the merge. So in today's video, I don't want to just give you another boring ETH Merge show. I actually want to talk about some of the tokens that are directly going to benefit post-merge. Have a look at some of these proof of work tokens, go through some of the major beneficiaries like liquid staking, and work out how you can actually play this ETH Merge long term, because we have been speculating for months about how the merge might react in terms of price, what the ETH merge means. And I think we're all sick of that content by now, or at least getting quite sick of it. At least I am. Like, literally, I scroll through Twitter and it's just merge, 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 merge all over my Twitter account. So today I want to take a slightly different angle and look at some of the tokens that I think will be major beneficiaries of the merge. But before we get into that, we do have to look at the merge and the Ethereum price, because it is a big event. To be honest, it is probably the biggest crypto event in many years, since probably, it's probably the biggest event in Ethereum's history since its launch. And it's probably, a top 3 crypto event of all time. So it is a major event, and that is inevitably why you hear it talked about so much, because it has major ramifications for the market. Now, we can see the Ethereum price after that major drop-off after the CPI came in slightly hotter than expectations, which obviously is not good from an inflationary standpoint. We have seen a slight bounce. So we did bounce off this diagonal support line, and we are currently breaking through the 1632 support and resistance level, which is actually quite an important level. This orange box has been strong support historically. So the fact we can get above this potentially is showing a little bit of strength for Ethereum, obviously leading into the merge. Now, I would say, by and large, if I had to guess, the Ethereum merge long term probably isn't priced in long term. So if we're looking with a 2-3 year time horizon, I would say the Ethereum merge probably isn't priced in. But when we're looking short term, and when we're looking at the next few months, I would say that it definitely is mostly priced in. And I would even go so far as to say that a successful merge is priced in. So I still think the market is discounting, in terms of percentage risk, the likelihood of a potential negative scenario today. And a negative scenario I don't think would impact Ethereum itself, because we all know if the Ethereum merge fails, they can just roll it back to the last block. They can do it again. So I really think the major issue that could come out of the merge isn't the merge itself. It is some of these other protocols that are reliant on Ethereum and haven't properly configured their smart contracts, haven't properly configured and planned for liquidity issues that could potentially take a knock. For example, if we see liquidity spreading extremely thin, that could lead to price volatility, which could lead to liquidations. We saw Kevin Zhao from Gallo Capital talk about that thesis in his last podcast. That is a very interesting scenario that could play out. So I am expecting some volatility in terms of price surrounding this event for that reason. We could also see, on the negative side, projects that haven't configured their smart contracts, especially projects that are borrowing and lending, for example, that use stable coins to collateralize assets. We could see potentially a mismatch across the amount of stable coins or assets being showed on chain and the amount of assets actually being held by a user. That discrepancy could cause issues with smart contracts. So that is more the risk going into the merge, not so much the ETH merge failing itself. So when we talk about the ETH merge failing, I think it's more about these other protocols exhibiting issues. To be honest, I think it'll be okay. I'm not panicking, but, buy the rumor, sell the news. Definitely a chance that there is a sell-off. However, the market isn't dumb. The market does price these things in beforehand. I just think maybe it isn't pricing the risks in enough. But, we'll just have to wait and see in 5 hours. Today's video is more looking at over the next few months what we can do, not necessarily over the next day what we can do, because I'm assuming most of you are already prepped. Most of you have already done the ETH trade for many months. Most of you have probably taken heavy profits on that ETH trade like I have, to kind of de-risk a little bit into today, so we can sit back and enjoy a little bit more without a crap ton of long or short exposure, which a lot of people also do have. But, you are playing a little bit of a risky game if you go into an event like this with a significant vested interest. Best to see what happens to the price first and then make a decision afterwards. Just before we get into these 5 altcoins that I do want to talk about today, remember we do have the $4,200 ByBit sign-up bonus. By the way, I'm a little bit sick today in case I'm coughing or something. But, I'm here anyway. It's a massive day. I got to be here for the community today. But yeah, if you do want to sign up for a ByBit account, trade any of these altcoins that I'm talking about today, either spot or leverage trading, you can sign up using a ByBit account. $4,200 sign-up bonus for those of you that want to go ahead and sign up to that link in the description. All right, let's get into the discussion. We have to first start with Ethereum proof of work. That is the major talking point now. So basically what Ethereum is doing is it's going to proof of stake. So the proof of work tokens have really seen some limelight at the moment, as there's a lot of speculation as to where the Ethereum network hash rate will divert its attention to, meaning where will the miners actually go after Ethereum, after Ethereum turns to proof of stake. So we do know that there is a proof of work fork currently. It's very hard to see a scenario where that proof of work fork actually succeeds. Okay, I'm back. You can hear me, right? Thumbs up? Okay, good. Sorry, I cut out just for a second. My mic cut out. But I'm all good now. Okay. So basically, it's hard to see a scenario where this proof of work fork actually succeeds, the Ethereum proof of work fork specifically, because of the issue that it's just hard to envision how many buyers will be actually in the market for this proof of work fork. Because or the proof of work side of Ethereum, which we know is going to be airdropped to current Ethereum holders as Ethereum splits into two different assets. I personally don't know where the buyers will come from. I don't know how many people will be speculating for this proof of work token. So it's definitely hard to see a long play for that token. In fact, I'm kind of bearish on that token in general. I'm much more bullish on proof of stake. But it does kind of present an interesting discussion as to where the hash rate will actually head. And we can see that there's a few major tokens that the hash rate has actually been diverting to. So we got Ethereum Classic, ERG, Flux, and Ravencoin. Ravencoin, absolute shitcoin. It's funny to discuss, but it's basically a crappier version of Bitcoin. Ethereum Classic, it's the old version of Ethereum from 2016, pre that initial fork. They actually split, and that one has really run up quite nicely. In recent times, ahead of the merge, ahead of a lot of speculation that people will divert hash power towards Ethereum Classic, and we have seen the network hash rate increasing significantly as a result of that. So I actually think Ethereum Classic becomes a decent play post-merge. I'm not so bullish on these other proof of work tokens. I don't really think there is a huge market need at the moment for all these proof of work tokens, although the hash rate amongst these tokens has been increasing significantly. I would say by and large, I am probably bearish on a lot of these tokens. So Ergo, Flux, Ravencoin, I'm just not a huge fan of them. I don't really see the need. I definitely see hash rate being diverted to these projects. We can already see that happening. I mean, just look at the run up in the hash rate here for Ergo, for Flux, for Ravencoin, absolutely exploding, for Ethereum Classic. But I think if there's a play here, I think Ethereum Classic post-merge is not a horrible bet, like in case something goes wrong with the merge. And either way, there will be speculation on proof of work, because proof of work, although it does have its downfalls, at the same time that there is a lot of proponents of proof of work, and there definitely will be some form of liquidity that flows into these projects. Hash rate, being one form of attention that will be flowing in. But hash rate is basically determined by the amount of miners that wish to mine a token. It's not where retail liquidity is diverting. So proof of work tokens, just to sum it up, I'm not so bullish long term. Ethereum Classic could perform okay, but by and large, it's not really a narrative that I'm playing. But if you have been playing it into the ETH Merge, then you've probably done very well from that. But they aren't the tokens that I'm primarily looking at. What I am looking at are some of these other narratives. And some of these other narratives are, firstly, liquid staking. So liquid staking, I think, is going to be one of the major beneficiaries of the ETH Merge. Why do I think this is the case? Because let's actually think about what the Ethereum Merge does. The Ethereum Merge is now moving to proof of stake, which means it needs Ethereum tokens to validate the network. So with a proof of work chain, you need miners to validate the network through mining transactions. Through proof of stake, you need stakers to validate the network through staking tokens. So this now opens up a new economy for ETH staking. And this is probably the biggest thing, and the biggest beneficiary right now is this staking economy. Because until the gas fees come down, which is many years in the future, that isn't the current upgrade that's happening now. The first upgrade, the ETH Merge, purely affects staking. That is the first major change, so they can pioneer on this path forward to proof of stake. So when we look at the major beneficiaries in the short term, it's very obvious to me that it will be the liquid staking platforms, the platforms facilitating staking off the back of the swap to proof of stake. So Lido DAO does become a valid play in my opinion. Now, if we do see a major sell, the news event, and we do see a major drop post-merge, if there's issues with the merge and there is a lot of FUD, which could be the case, it could happen, then there are going to be tokens which I think could be a great opportunity to scoop them up. Lido is actually one of them because Lido is the biggest liquid staking platform on Ethereum, on DOT, across many other projects as well. But primarily Ethereum now because it's the main place where you can liquid stake Ethereum. People prefer liquid staking because you don't need to lock up your tokens. You can still keep a bit of liquidity. That's why people love liquid staking. You also get some extra incentives from Lido themselves, which make it even more enticing to liquid stake. The only issue here is, and it's not a huge issue, but it is something to note, is if you do stake your Ethereum in Lido, because of the redemption mechanism, meaning, they take your Ethereum, they stake it, at some point they have to redeem those tokens. They can't actually redeem them until a certain network upgrade goes live. And this upgrade is slated to happen in a few months' time, probably January, February next year. That upgrade is the upgrade that will allow ETH to be swapped for staked ETH. So right now, staked ETH is trading at a slight discount to Ethereum, because obviously the opportunity cost becomes a play because it's not going to be redeemable for a few months technically, but we know it will be redeemable. Proof of stake works. You will be able to redeem staked ETH for ETH. This will just take a few months' time. So Lido, especially once this redemption mechanism goes live, because that's going to give people more confidence, Lido will be one of the biggest beneficiaries, in my opinion, from the ETH merge because it basically harnesses everything that makes the ETH merge special because it's the staking's the biggest upgrade here. So it makes sense that Lido will accrue some of this value. It has pumped. The tokenomics aren't the best. It does not have the best tokenomics. I've done a lot of research into it. The Lido DAO token is a governance token. It gives you governance voting rights over where they will direct emissions in the future. You're kind of speculating a little bit on certain votes passing for you to take the full benefit of this. It is in the best interest of the Lido DAO holders to vote advantageously in terms of profit distribution, which is why I still think it's a good play. But it doesn't have this, crazy buyback burning, revenue accrual kind of mechanism that, GMX or something like that would have. That is amazing on the tokenomics front. So Lido DAO, good token. Probably if it drops post ETH merge is one definitely worth looking at because it's going to be one of those major beneficiaries. We also know it's 82%. It takes up 82% of the ETH staking or the ETH active users liquid staking, which is massive. So it's by far the biggest project in the space. But I also have another project, which I think is underrated on the liquid staking front, which I think could actually be a good play as well. And this is Rocket Pool, RPL. Now, just like Lido, it is pumped in the lead up to the ETH merge. But I do still think there's room here, especially if we do get an extended pullback, a little bit more of a pullback. I still think there's room here for a play on Rocket Pool. Rocket Pool is basically a liquid staking platform, similar to what Lido's doing. It operates a little bit differently. The tokenomics are actually better than Lido itself, but you can stake it. You can stake your ETH. And essentially you could stake through node operators here. So it's kind of like a node. It's not exactly the same as how Lido works, but essentially you can stake it, run a node, and earn rewards. So right now they're saying the rewards are going to be around 5%, but you also receive RPL rewards, which are Rocket Pool rewards as well. And the tokenomics here are pretty decent as well. The circulating supply is maxed out, total supply maxed out. So there's not much dilution yet to come. And they've got a very kind of linear way that the token actually accrues value. So this guy, E1ETH, said, CT, I've known no clearer alpha in my 7 years of crypto investing. 1.42% of the staking market share, not yet listed on any centralized exchange. Let me actually check that. I think that's true, guys. I think that's actually true. Yeah, it's not. It's only on Uniswap. Wow. Mexi has one pair. That's it. So that's definitely a bullish thing. Just broke into the top 100 on CoinGecko. I think now it's number 80. So it has smashed into the top 100. Bankless, Hal, and others interested? Yeah, it's got some major backers. Major backers. Merge in a few days. Now the merge is in a few hours. Only 1.42% of the total percentage with 6,000 validators. So Rocket Pool becomes a better play than Lido. I'm still going to buy some Lido because Lido is the safer play. But in terms of the staking side of things, I think Rocket Pool probably can perform even better. The fact it doesn't have exchange listings means that it kind of has more scope for growth. So Rocket Pool, actually one I'm going to be buying over the next few days. I'm just going to put a little bit of money in. Let's post ETH Merge. I'm going to wait for the merge, see what happens with the merge, buy some Lido, buy some Rocket Pool, with kind of like a long-ish time horizon. There's no like rush. This isn't like a play that's going to pump if the merge is successful instantly. This is kind of so when you're betting on liquid staking and when you're betting on node operators, you're betting on long-term more people staking ETH. It's as very simple as that. You're just betting on more users staking ETH. Long-term proof of stake, the biggest beneficiary is that very factor. It's the fact that people are going to be staking ETH and more users are going to be staking ETH over a long period of time. So when I look at assets like Rocket Pool and Lido, I don't see them as like this short-term cash grab that'll pump. Obviously, they're pumping in the lead up to the ETH merge, but I actually see them as great long-term plays to capture some of the value off the staking side. So that's why I view something like a Rocket Pool or a Lido with a slightly longer time horizon. Definitely, like you could view it with a year plus time horizon because long term, these guys will be the major beneficiaries. But if you do want to hedge against a potential rally, then you get an initial entry. Obviously, none of this is financial advice, but this is kind of a common DCA strategy. You get an initial entry at an advantageous point. As I said, potentially that could be after the merge if there's a sell-off. You get your initial entry, then you essentially come up with a plan given your time horizon. So you need to predefine that. So let's say it's a year. You kind of reverse engineer. So let's say you want to put $1,000 in. You might get an initial 25% just to get something in as a hedge in case it's going up. So you put $250 in. And then over the next, let's say 12 months, you come up with a plan to DCA a minimum of let's say $50 a month, and on red days of 15% plus, you double that DCA, something like that. That's like a simple way, but just define your DCA plans for projects like this because this does have a slightly longer term time horizon. But the reason I'm getting an initial entry is for a short term hedge because you never know when these tokens are going to pump, so you can't be too complacent, but also you don't want to rush in. It's a fine balance in crypto when it comes to getting entries. It's one of the hardest things to master in crypto is when to enter, when to exit, because there's a million amazing projects. That is the hard part. That is where the skill gap is created. So by actually creating a plan to DCA and sticking to it, you're already going to be ahead of a lot of people that kind of just ape in, and then when the market crashes, they panic. Like that's just the opposite of what you want to be doing. But I do think Rocket Pool can do well. Thomas says, any suggestions of coins that haven't pumped already? I mean, there's heaps. There's heaps. I mean, yesterday I talked about some of the Arbitrum tokens which haven't pumped already. A lot of the gaming tokens haven't pumped already. Hustle did a show on it earlier. There's many tokens that haven't pumped already. This video is about the major beneficiaries from the ETH merge. And the thing is, just because they're pumped doesn't mean they'll be a terrible buy, because what could happen is there will definitely be a sell-off at some point post ETH merge. And then that becomes your opportunity to scoop up tokens that were simply like buy the rumor, sell the news, right? So it's still important to keep these in your watch list. And a lot of things are up 40-50% from highs, from their lows, sorry. It's just some of these ETH tokens are up a little bit more from their lows than like a token, let's say like Phantom might be up 40% from its lows, whereas like some of these ETH tokens are up double. But that's because, there's been a structural change in the ETH market because, the fundamentals are definitely altered in a positive way due to the merge, especially if successful. So yeah, I wouldn't say that these have even really pumped into the grand scheme of things. Sure, in the short term they have, but something like a Rocket Pool, it's gone from $10 to $30. So yes, it's 3x. Like Lido's doubled as well. But then again, they're not prone to not dropping. Like this could go back down to 20. Suddenly it's only a 2x. You buy it at 20. Sure, you're buying 2x off lows, but you're DCAing it over a longer period. You likely see lower levels post midterms. So you probably want to take some profits in the short term on that initial buy back post midterms. You could be buying at $10 again. So this is why we got to start making our watch list now, because you don't want this to evade you. You don't want to get to like November, December, miss great entries because you were too lazy to come up with your DCA plan. So just because it's pumped doesn't mean we can't come up with a plan here, because these are still fundamentally good projects. But they're the liquid staking beneficiaries. There are other major beneficiaries. This is just the Rocket Pool Luna Crush engagement. Pretty high. It did peak. It came back down, but it did have that massive spike one day. There are some other major beneficiaries. GMX, this isn't a direct beneficiary because you earn ETH from staking GLP. You earn ETH from, staking GMX tokens. I would say GMX is a beneficiary if there's issues. Why? Because GMX makes money when there's liquidation. So the more people that get liquidated, the more fees actually paid to GLP holders. So you are relying, or not relying, but you're kind of benefiting off downwards volatility, your downwards liquidations, and general price movements if you hold GLP, because you're earning Ethereum because you get a percentage of the trading fees. More liquidations, more trading fees, more GMX also accrues value. So GMX isn't a direct play. It is a little bit of a stretch, in all honesty, but there is a scenario here where we do see liquidity issues become apparent, and there is volatility, and GMX's fees pump because it kind of does benefit off any sort of volatility. So that's why GMX's 7-day fees have been so crazy. We look at its 7-day fees. I just want to load it here. GMX has overtaken Aave and Bitcoin. It's absolutely crazy. It's absolutely crazy. Long term, this is one of the best projects ever that you can hold. But it's just pumped so much. So I wouldn't be buying now. I get a lot of questions about, should I buy GMX now? Personally, I wouldn't be buying GMX now. It's at $15. It went to 47 at 3x. So I would be waiting for a pullback, because inevitably this will pull back. The problem with GMX is that a lot of people are now pricing the couch. Someone said the couch looks comfy. It's very, very comfy. I could just go lie on it right now, to be honest. No, I wish. I'm in my robe as well. It's got my initials, MD. But yeah, in terms of GMX, like, I think with GMX, the issue is people are pricing GMX based on its future valuation on annualized revenue today. So if it does $1 billion or $1 million, how much did it do in fees? It did $1 million in a day. So people are annualizing $1 million in fees is $365 million a year. Because it's kind of like this DCF model that we see in stocks, where people value the price of a stock based on its future growth. So essentially, there's a lot of future pricing going in to determine GMX's market cap, which is now close to 624 million fully diluted. Now, if it managed to do $1 million in fees every day, then this would be a PE ratio of 2, which is quite low. And that would be a great valuation. The only issue is, I definitely see a period where, and a scenario here, where fees could drop off significantly for a week, and that would significantly alter, due to market conditions likely, or just due to a new competitor, or an issue, or just any real headwind, that could create an event where this DCF model is slightly harmed long-term, and its overall valuation takes a short-term hit. So that's why I'm not really buying right now, just because you're buying into a day that has had $1 million in fees. You're buying into an increased valuation based on its long-term prospects. And although it's a great long-term project, $47 is not cheap. I do think once we get to this 25, 30 range, long-term, it's a great project. I would be more interested in GLP. I just would be. GLP is your earning component, where you can just stake their basket of assets. Right now, those assets are like Ethereum, Bitcoin, Uniswap, USDC, USDT, safe assets. You can earn 35% of them on the ETH side. I'm actually on Arbitrum now. If I swap to Avalanche, you've got 22%. Arbitrum, you've got 39%. Massive APR. But the APR is calculated on the daily, so this does drop a little bit. So the higher APR right now is kind of probably juicing it up slightly. So GLP becomes a decent play, in my opinion. So these are the assets you're essentially getting exposure to. I did a video on this a couple of weeks ago. This becomes the safer play short term than buying GMX directly, because you're still earning from protocol rev, but your underlying assets aren't going to be as volatile. So that's the play for now for me personally. GMX itself, that's going to be one I buy, but I'm going to wait. I'm looking at GNS, Gains Network, a little bit more. So Gains Network is a competitor, arguably has tokenomics that are just as good, but just doesn't have as many users, simply as that. But it is launching on Arbitrum very soon. They said yesterday that they are working on a plan to launch in Arbitrum in the near future. That will be very good for GNS. That's where I see capital rotating. That's a better buy. So if you're itching to buy one of these decentralized perpetual exchanges, GNS over GMX right now, But GMX still could be a beneficiary long term of the merge. As I said, it's a stretch, but it still could be. And then the last project, which could be a beneficiary of the merge, and this is very simple, it's actually just Uniswap. And I think I forgot to get the tabs up for Uniswap, but I can literally just talk about it now. Uniswap itself is one of the biggest beneficiaries. Because long term, the merge puts ETH on a path to lower gas fees. Now, the problem with Uniswap is not a lot of people love to use it. In fact, most people don't use it because the fees are still relatively way too high. Even with gas fees now on Ethereum being 50 cents to $1, that is still way too high. Crypto needs like 1 cent. No, it needs less. It needs 0.001 cent gas fees long term for mass adoption. People want essentially free swaps. So the merge won't fix this. We all know this, but Vitalik kind of stated that the merge is putting Ethereum on the path to fixing the gas fee problem. Their ZK rollups, their sharding are the major upgrades which are going to really have an impact on the gas fees. So short term, Uniswap, it may pump around some ETH hype, but I think that play is already over. I think the bigger play is long term, accumulating with a longer time horizon, Uniswap token. So this is a token I'm definitely looking at adding to my DeFi portfolio for sure, because its tokenomics are actually very, very solid. It has pumped recently, but not really. I mean, if we look at the chart, like, sure, it's pumped, but it went from 360 to 618, and it had a high of 920, and it's now down another 30%. So it's not like a terrible DCA zone at all, Uniswap. Long term, it is one of the beneficiaries. It's the biggest DEX on ETH. Its tokenomics are getting better than when it first launched in 2020, and we saw those crazy emissions, and it was kind of like not very advantageous to hold the token, but it was advantageous to farm the token and sell rewards. Now that landscape's shifting slightly. Many great initiatives coming with their order book style AMM, their LPs, new adaptive LPs, many cool new features. I think long-term Uniswap becomes a beneficiary. So that's another one to look at. So there's a few tokens here. The proof of work ones I wouldn't bother with. Maybe Ethereum Classic if you're a punter. Ravencoin, don't like it. Lido DAO, liquid staking, I really do like that. Rocket Pool, I think maybe a better risk reward play than Lido, but it's smaller, so you have to allocate accordingly. So let's just do very simple maths. Lido, market cap of $1 billion. Rocket Pool, market cap of 500 million. All right, so if you're buying Lido, you want to have double the amount than you have in Rocket Pool. Kind of a simple way to look at it, but that's kind of just like a very easy way to price allocations here. I do think that'll be a beneficiary. And then you've got Uniswap as a long-term beneficiary, GMX as your hedge against downside. It's essentially like a bear market token, but I prefer GLP. And then lastly, GNS is a play off the back of GNS. So GMX, sorry. So quite a lot of alpha, to be honest. We've covered a lot of stuff, a lot of very cool stuff that you can go off and look at now. Hopefully, I put you on the right path about starting to think of future narratives a little bit more, because I think we're all very caught up in, will the ETH merge be a success? But like, I think we should be asking ourselves not the question of how will the ETH merge affect ETH prices. We should be asking ourselves, how will the ETH merge affect its respective ecosystems? That is the most interesting part of this whole thing. I do want to continue this conversation though on Instagram. So I'm going to head over there now and go live with you guys, so I can answer questions, do a little Q&A, talk to you guys about the merge, because it is one of the biggest events ever in crypto. So it's definitely worth having a chat about. So yeah, link in the description for my Instagram. If you follow me, I follow a few people back, and we can also have a, sorry, I'm still a little bit sick. We can have a discussion about the ETH merge. And obviously anything else that you want to ask, not just the ETH merge, because there's more interesting things to talk about. I've heard the merge for months. So yeah, head over to Insta. I'll hang out. If not, I'll see you tomorrow. Rand and Sheldon are doing that big show on the merge later today. I think it's in like 3, 4, 5 hours. 5 hours they're going to be going live. So I might even head on to that and join for a little bit, just to say hi, hang out with you guys then. So that'll be a fun stream. But yeah, I'll see you on Instagram. Cool. Peace out.